but I really believe gold and silver belong on the same level now. And both, I think my feeling on this is we've been halfway through this move. There's another half to go. It's probably not as straight up, but the next big push is going to come when that news breaks and people realize what the BRICS are doing with gold. And that's going to be where we get that, clear break well above 2,500 on its way to 3,000, and silver, $35, $40 heading towards 50. And so I'm getting past the next few days or a few weeks until we have this fall meeting. Yeah, we could blunder either side of a couple of dollars on silver and $100 or so on gold, but they still have substantial upside potential.
Investors have traditionally viewed gold and silver differently, with gold often seen as the primary, more reliable asset, while silver was considered its secondary counterpart. However, recent market dynamics have significantly changed this perspective, making a strong case for treating both metals with equal importance. Silver has been leading the charge, up nearly 22.5% in the year's first half. Often referred to as the poor man's gold, silver is proving its worth, driven by a global supply deficit and increasing demand. The Silver Institute forecasted that global silver demand would reach a near-record 1.2 billion ounces in 2024, up 1% from the previous year. As famous analyst Peter Grandich highlights, this growth is primarily fueled by industrial applications, particularly in the booming solar energy sector. With its increasing industrial uses, the fundamental outlook for silver has improved dramatically. Silver's supply and demand scenario is now extremely bullish, making it a highly attractive investment option. Gold has performed exceptionally well in 2024, rising 12.8% year-to-date and outperforming many major asset classes. This is impressive given the high interest rates and strong US dollar, which typically challenge gold. What's behind gold's resilience? It's a perfect storm of factors: continued central bank buying, strong Asian investment flows, steady consumer demand, and persistent geopolitical uncertainties. According to the World Gold Council, central bank demand alone contributed at least 10% to gold's performance in 2023 and potentially around 5% so far this year. The anticipated strategic moves by the BRICS nations regarding gold could lead to significant price increases. Peter anticipates that gold has the potential to break well above $2,500 and move towards $3,000, while silver could see prices rising to $50 or more. Although there might be minor price fluctuations in the short term, the long-term outlook for both metals remains highly positive. We will present clips from Peter Grandich's interview with Andrew Maguire. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
When I last spoke at shows, I used to get the irk of silver investors because I'd always say silver was the kissing cousin to gold and that I would always own more gold than I would own silver. But what I've said of late to people is the fundamental argument for silver has changed dramatically for the better. There is so much more industrial usage for it, and the known supply and demand scenario has turned extremely bullish for it. I think my feeling on this is we've been halfway through this move. There's another half to go. It's probably not as straight up, but the next big push is going to come when that news breaks and people realize what the BRICS are doing with gold. And that's going to be where we get that, clear break well above 2,500 on its way to 3,000, and silver, $35, $40 heading towards 50. And so I'm getting past the next few days or a few weeks until we have this fall meeting. Yeah, we could, flounder either side of a couple of dollars on silver and $100 or so on gold, but they still have substantial upside potential. And again, the worst case scenario is to buy it and hope it doesn't go up, because most people steal assets are based in financial assets, not hard assets. I'm a big believer in the BRICS. I believe, in fact, let me take a step back and so I believe there's 5 key factors for Americans. As Americans, I can't speak for Europeans, but as Americans, they should build what I call a financial arc. That's what I started stating in March. One we all know about, we can talk about to the cows come home, the debt and deficits. We're going to get to a point soon where we're going to have a problem paying just the interest. Second, in America, we have a huge retirement and aging crisis. Third, and it's around the world, you got it too, we have an immigration invasion. And there are economic consequences that people don't understand. I'm going to skip to the fifth one. We also have here in America political paralysis. We have two parties that can no longer work together, be in the same room, and each has a splintering within their group moving in the opposite direction of the main middle ground. But the fourth reason I've told people, and I've said it's the most overlooked economic decision that Wall Street has messed up on, probably in modern times, will be the misunderstanding and not appreciating what is happening with the BRIC nations. You and I exchange that stuff, so we know each of us have been speaking about that. It is unbelievable to talk. I gave a talk recently to some young advisors, and I said to them, even if it only ends up 20 or 30 countries, that's 20 or 30 countries that used to deal with the United States in a big way and now won't be. How's that beneficial to the United States? How does the BRICS benefit the United States? It doesn't. It is so negative. And again, you being ahead of the time like you were about the manipulation. I absolutely agree with you. I don't have the contacts you have, but it's important when people like you talk about it because I know you do. There's no question that this big movement in gold that occurred, in my mind, Andy, and I know I'm singing to the choir, but even if I was being on national TV, I'd say the same thing right now, happened not for a trade, not for speculation, but because people believe an alternative is going to be necessary, even on a regional basis to start, and eventually, because people are just going to see that trusting paper is a lost cause when everything goes to hell in a handbasket in the United States. And where's it going to be used? It's going to be used by the groups in the BRICS. Now, how they exactly use it, that's your area of expertise. And I always bow to people that I know that are smarter than me, and you are. But I'll just tell you this, you're absolutely right. And I think it's going to be a shock to people.
China and the US have historically had a complex relationship marked by periods of tension. Recently, tensions have escalated as China significantly reduced its US treasuries and agency bond holdings by $53.3 billion. As of April 2024, China's foreign exchange reserves totaled $3.2 trillion, with US treasuries dropping to just under $40 billion and agency bonds reduced to $10 billion in the first quarter alone. This reduction by major holders of US debt, especially China, raises concerns about the stability of US debt markets, exacerbated by the ongoing practice of the US government buying its debt. Peter views gold as a hedge against economic uncertainty and inflation in this scenario. A sharp increase in gold's value typically indicates a decline in the value of other financial assets. Gold has a long-standing reputation for preserving purchasing power over millennia, contrasting with digital ledger assets that are susceptible to technological failures, including potential power shortages. Regardless of current financial conditions, such as market fluctuations and geopolitical tensions, including gold and silver in an investment portfolio is crucial. Let's get back to the interview.
We kind of have it already. Some of the biggest holders have liquidated, especially China, continues to sell it all. In fact, if we weren't buying our own debt, I don't know where we will be. And you're right. It says on our money, the full faith and credit of the United States. Well, look at the time when Trump suddenly thought, when people thought he couldn't pay 25, 30 years ago, he couldn't get $2 worth of credit. That can happen to the United States. You don't want to wish that. But that goes back to maybe whatever time we have left is why people should own bullion. I always tell this in our planning group, Andy, and I'm singing to the choir, but I'll just say it. Sir, Mrs. Jones, I think you folks should own some bullion. And they go, why? I said, because I'm going to hope that it doesn't go up. And then they look at you and they go, why would you want me to buy something that you hope doesn't go up? I said, well, based on your portfolio here of 99% financial assets, if the gold does go up, your assets are probably going down in value. And it's an amazing phenomena that something that worked for a couple thousand years, forgetting even the biblical portion of it, just known history, that always preserved purchasing power. Always, it bought a suit 1,000 years ago. It bought a home 1,000 years ago, 500 years ago, 200 years ago, 100 years ago. And then you want to tell me about some thing that sits on a ledger somewhere on a computer, which we don't even know if we're going to be able to turn on the power because of all the power shortages that we're going to have. But I'm going to feel comfortable that I got something sitting out in cyberspace where my asset is versus something I can drop on my foot and break my foot by it. I'm old school. Give me something that'll break my foot if I drop on it versus something that's on a computer ledger somewhere. So I really, really think no matter what happens today in expirations and all that, everything that's happening in the world today, you have to have it as part of your portfolio. Listen, again, financial advisors in the U.S., I'd say to them, name me the 3 tier 1 investments that the world recognizes as investments. And most of them get 2 of them. Yeah, stocks and bonds. Almost none of them say gold. And I say gold is equal to stocks and bonds as tier 1. But in your portfolio, I don't see any of it. And that's the argument. That's why I don't lose sleep over it. Yeah, the mining shares, it's a different story. But physical ownership of bullion is buy it and hope it doesn't go up. Simply because if it goes up a lot, the world that we want to live in is probably gone away, and the one that we're going to have to live in is going to be a whole lot harder to survive in.
Given this week's strong bullish price action, gold is positioned bullishly following a choppy 5 weeks to challenge the recent trend high of $2,450. Whether it achieves this quickly remains to be seen, but the momentum is positive. Silver, showing ongoing strength, appears poised for another breakout to the upside in the near term. How do you perceive the recent bullish momentum in gold and silver prices? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.